We're having one of the biggest bear traps in history. In this video, we're going to go over the charts, the news, the analysis, and why I think that this is one of the biggest bear traps in history. We're going to go over the macro, we're going to go over the micro and how it relates. We're going to be talking about the war in Israel versus the tariffs right now, because a lot of people, I think this is a big, bad, scary event that's happening. We're going to go over that. We're going to talk about the notion and the idea that Altseason is canceled, as well as we're going to talk about the big scary event, which is April 2nd, which of course is when the tariffs actually go into full effect. So my goal of this video is not to convince you of anything. It's just to articulate why I think what I think right now and to have support for this. All right, but let's start off with the macro. So right now, Bitcoin has crossed $88,000. Now, we haven't quite got a daily body close, but this was one of my first stipulations for confirmation that this was a massive bear trap. If you remember, the three things were $85,000 daily body close. Above that, we have gotten that. Stipulation number 2 is $88,000. We are very much flirting with that right now. And a lot of people said yesterday, pump into the weekend, that means dump on Monday. Well, turns out maybe not so much. And stipulation number 3 is getting a daily body close above $95,000. So we're not quite out of the woods, but I can see the house from here. And let's talk about this, what I think to be a massive, massive bear trap on the micro. And so what I have right now is Bitcoin, and what I talked about many times, and we're going to compare this to the altcoins as well, is back in 2022 people were mad at me at how much I had Bitcoin as a part of my portfolio, and I was saying that you should have Bitcoin be the biggest portion of your portfolio at this point. And the reason for that is because Bitcoin in the early stages of the bear market excuse me, comes down the least, and it comes up first and the fastest. That's what history shows us. That doesn't mean it needs to always be this way, but until that changes, that's how I'm going to play the market. And what we're looking at right here is from the C19 crash until this first big bear trap back in 2021. And I want to show you guys something, that during this time, Bitcoin does a 10x. That is a lifetime of stock market gains, right? But when we compare that to the total 3, so on the top we have Bitcoin on the daily, and on the bottom we have the total 3 on the daily, and it's the same time frame. And I've even circled the same exact points. So this is the C19 crash, the massive bear trap, and the massive bear trap. These are the same dates. As you can see, is when I scroll, they go together. Okay, so this right here is the same time frame. Bitcoin does a 10x during that time frame, and look at the total 3. It's basically at the bear market lows. And people keep asking me, like, has there ever been a point where right before the bull market starts, the altcoins are at their bear market lows? This has never happened before ski. Well, I would say, well, how about in 2021? The total 3 barely moved during this time, while Bitcoin does a 10x. Just to show you, this is a 2x during the same time, while Bitcoin is up a 10x. And that's how the coins go. Everyone is like stacking up on altcoins the entire time, and I don't think that that's how the market is played. Bitcoin comes down first, and it goes up first. And once you get this massive bear trap, I'll show you how the story ends. From this point on, Bitcoin does another 1x, and Bitcoin is no longer the play at this point. It does a 1.2x, and I would argue that's exactly how I think Bitcoin is right now, where I think Bitcoin goes to $138,000, maybe $207,000, approximately a 1, maybe 2x. That's not why we're in crypto, right? That's not the entire point of being in crypto. But when we look at this from the same pullback, from the same time, here's how the end of the story is. Here's the total 3, which is what I would measure as the altcoins. It wasn't until this pullback right here. Look, you can see it scrolling. You can see the bottom scrolling during the same time. Let's even line this up perfectly if we can here. It wasn't until this pullback that this really started moving. Okay, that's when Altseason was. It wasn't before then. Okay, we're literally within 30 days of doing the exact same structure. And right now with Bitcoin, I think that this is the same thing. You had the a massive bear trap, what I believe to be a bear trap, and you have the same sort of stipulation that you would always have. You have your selling climax and then your secondary test. And the rules of Wyckoff, your selling climax and then your secondary test. The secondary test goes lower than the selling climax, even though the selling climax is technically the bottom. That is what I think has happened here. I think that this was our bottom, the selling climax, and then this is your secondary test. Same thing here for the total 3 right now. This is why I think that this is a massive bear trap in the macro. You have your selling climax and your secondary test. The secondary test goes lower than the selling climax. Now, again, confirmation of this is $95,000. Confirmation of this for the total 3, which it looks like it's already making higher highs and higher lows. All right, but what about the micro? Let's compare this to the war in Israel versus the tariffs. Because in a lot of ways, I think, and not only what I think, but you can show that you can see this in the markets with the fear and greed index, with the stock market and with the cryptocurrency market. This is a similar amount of fear that we had in the markets from the tariffs that we did back in the war in Israel. So we just talked about the macro setup that we have. Now let's zoom in even a little bit more and go into the micro, because I think it's a lot of the same thing, right? So you had back in 2023, July, Bitcoin was at 31,000, almost 32,000, and crashes all the way from 32,000 back to 25,000 in a very short amount of time, right? And this was fresh off the heels of FTX going to zero. It wasn't even that long ago. So this is about a 22% correction, which is a massive deal in the matter of 2 months. And even most of it wasn't even 2 months. It was from here to here. This was, less than 15 days, a 16-17% correction. And this was the same thing. So you had your selling climax was right here, and this was your secondary test. And how do I know this to be true is look at the daily RSI. So when you come down this first initial crash, right, this is your selling climax. This was the lowest point you got on the RSI, on the daily RSI. See how it's flashing in the red right here, but then you go lower. But the RSI is higher. So this is now a divergence. This is a secondary test. This is the true bottom of this structure, even though you go lower. Now I'm talking about, of course, the rules of Wyckoff. And then what starts to happen is you get a higher low, and then you get a higher high, and a breakout. Okay, well, what do we have right now? And look how similar that the structure is. So on the top, we have Bitcoin during the war in Israel. And then on the bottom, we have Bitcoin on the 5-hour chart, not the daily. The top is the daily chart. The bottom is the 5-hour chart, because this is a little bit more zoomed in of a time frame. But so this is for, I'm calling this the tariff event, right? And look at the structure. You have chopping at the top here, sort of on a slight slope of a downtrend. Then you lose it all. You have your selling climax, right? We know that this went, even though it went lower, this was the true proper selling climax. Same thing here. And we can see this again, that we know that this is the selling climax because you have a big start correction into the maximum RSI being oversold. Same thing, big start correction into the maximum of the RSI being oversold. You come up a little bit, and then you come back and get a one more lower point. And this is the pit of despair. And back during this time, my entire community, I remember it was like that was the lowest we felt, even though we were just at $15,000. And this is why I came out on the 12th and made a video saying that the local bottom is in. Here's XYZ reason why. This was one of the reasons why, because we were getting a divergence. And what are we getting right now? We're getting a divergence. The selling climax, the secondary test goes lower than the selling climax, but the RSI is higher. That is a divergence. It's the same exact thing. Okay, so selling climax, secondary test, selling climax, secondary test, and then you start to get your higher low, higher low, higher low, higher low, higher low. Then you get your higher high, higher high, higher high, higher high, breakout. Are we working on the breakout right now? Again, we've already crossed 2 lines in the sand for me. Line number 1 was getting above $85,000. Check. Line number 2 was $88,000. Check, check. Line number 3 is $95,000, but by then, most of the market is already going to move. I think that this was a massive, massive bear trap. And I'm showing you the technical reason. I haven't even talked about the sentimental reasons, which I could go on all day about. But in short, every single content creator and their mother and their brother has been telling you that the bear market is here. One thing I know, I don't know everything. I get things wrong. I'm not perfect. But one thing that I know is when everyone is telling you one thing, retail is always wrong. And one quick little point that I would like to make about the war in Israel versus the tariffs, where we just compared it from a technical perspective, is, listen, whether you like the orange man or not, I get it. A lot of people hate his guts. A lot of people worship the very ground he stands on. I get that. The war in Israel, I need to put in perspective, is not worse than the tariffs, because the war in Israel during this time, the thing that was being shoved, crammed down our throat was World War III is on the brink of happening. And that was every single day from every single media outlet. And we were off of the back of a real recession, even though they changed the definition. And people were talking about we're going into another one. So listen, whether you like the orange man or not, the tariffs are not worse than World War III. It's just not. So that brings us to my next point. Is Altseason really canceled? And I think I already alluded to this in many ways by going over Bitcoin versus the total 3. Bitcoin goes up first. Everyone keeps saying it's different this time, Ski, I promise. So is Altseason canceled? I would say absolutely, positively not. Somewhere in the macro, I think we're doing a massive bull trap just like this with the same exact setup with altcoins. Okay? And from here, from this pullback, when Bitcoin starts to rally, it does another 1x. That's when we got our actual Altseason. Okay? How long does it take to cook rice? It takes as long as it takes. Okay? Be patient. In my opinion, a lot of people really just got fooled. And a lot of the, quote, dinosaur coins are going to perform very, very well during this next season. All of this season right here, if we were to break it down like this was all about Bitcoin, this downtrend. Bitcoin came down the least. Then accumulation. Bitcoin went up first. This whole entire season, until now, has been all about Bitcoin. And now we've had a massive bear trap. And we're going to start going into the next phase of the game. And the next phase of the game is this right here. That's what I think we're upon. Okay? So with all that being said, is April 2nd the end of the line? Is it the end of the cliff? No, I don't think so. And the reason is, again, back with the war in Israel, that narrative. So there's so much similarities going on right now in the macro and in the micro. But I want to keep honing in that the structurally and sentimentally, the tariffs are the exact same as the war in Israel. And that was the same thing during the same time. Again, you really have to put into context during this time when the war in Israel started. That it was shoved down our throat every single day about the brink of World War III is about to start. The brink of World War III. And all of these things, right? And this is what I would argue, and this is what I would say. The markets do not, it's not that they don't like events. It's not that events scare the market. Whether it's World War III, whether it's a different president, whether it's tariffs, whatever the case may be. It's not the actual event that scares the markets. The thing that scares the markets is the uncertainty. And just like back here, this was an event and this was a narrative that could scare the market. And it scared the market and it scared the market until eventually the war continued and the markets no longer cared because the markets were no longer uncertain about it. And I would argue, especially structurally and sentimentally, we have the exact same setup. But that's going to be it for this time. If I brought you any value, make sure you drop a follow, subscribe. Peace.